It's a new year, and this is your guide to buying a home in 2025. In today's video, we're going to talk about the state of the market, why 2025 might be the year to buy a home, and where the market might go. We're going to talk about how 2025 might be different than 2024, some common mistakes that buyers may make along the way, the cost of waiting to buy a home, and if you are ready to get started, 3 ways to move the process forward. So what was the state of the market in 2025? Well, the theme of the market was
flat. It was boring. It was quiet.
there wasn't a lot of properties that necessarily transacted in comparison to years in the past. Towards the end of the year, we saw about 6.6 months of inventory. There was a steady climb of inventory since the beginning of the year in January, with a slight drop in October. 6.6 months of inventory, that puts us towards the higher point of a balanced market, almost teetering on the edges of a buyer's market. And the conditions for a buyer's market, well, that means more product to choose from, and prices may be going down because properties are sitting on the market typically a little bit longer than they normally would. Now, while inventory levels could be argued that they're actually at healthy levels today and much healthier than they've been in the past, naturally, as inventory has been climbing over 2024, you can imagine that prices, well, they responded appropriately. So as prices responded and as listings increased on the market, there was more and more opportunity for home buyers, and it was becoming more and more difficult for home sellers to actually sell their properties. One of the first reasons we got here, of course, in the first place was just the cost of borrowing money, the cost of getting a mortgage for a home. And this is all post 2022's type stuff. So if you're watching this and you've been paying attention for any amount of time, you know that mortgage rates absolutely skyrocketed in 2022. But the story of 2024 wasn't skyrocketing mortgage rates, it was actually mortgage rates getting cheaper. At the beginning of the year, the prime rate from the Bank of Canada was floating in and around the 5% mark. We saw quarter point rate cuts in the months of June, July, and September of this year, and even a 0.5% rate cut in the month of October. So money was getting cheaper, but listings were still climbing. People weren't reacting to this cheaper money because when the bank rates go down, it doesn't always impact the market immediately. It takes time for this money to start doing its thing in the economy. So a way to sum up this situation and the environment that we were in coming out of 2024 is kind of like having a Boxing Day sale at a store that not many people visit. Think about it. There was the most selection in this store that sells homes, since there has been since 2014. And the things in this store, they went on sale. While we only saw a 1.7% drop from the months of January to November, which doesn't sound like a ton of money, that was still properties going on sale. The benchmark price of a home was at about $971,700, which was a savings from the start of the year of about $16,500. So why might 2025 be the year for you to consider buying a home, and where might the market go from here? Well, this is where we get into predictions, and I'm not going to share my own predictions about where the market might go. I'm going to let some people maybe a little better qualified to handle that, and that is economists. Economists are trained specifically to do this sort of thing and help forecast where they see things going. In this case, where they think the market might go in terms of house sales and prices in not only British Columbia, but also in Canada. This is the absolute best that we have. These people are making educated estimates on what they think is going to happen. And of course, they can't predict things that are one-offs, things that would not normally be expected, things like wars or pandemics. But if it was going to be business as usual in the year of 2025, this is what they say. The big 6 banks across Canada all say that Q4 of 2025 is going to range with the overnight Bank of Canada lending rate between 2% and 3%, with an average estimate between the 6 banks coming in at 2.375%. This is obviously way lower than it is today as of the day of releasing this video. This sort of information is also somewhat confirmed by the British Columbia Real Estate Association, or BCREA, and their chief economist. Their chief economist, Brendan Ogmanson, who said gradual rate cuts are expected as long as inflation stays on course, and added that the Bank of Canada is on a glide path to a 2.75% 3% policy rate. There's been lots of talk about new construction. In fact, that has been absolutely dominating the political headlines for the last few months. We need more construction, not only in the Lower Mainland and British Columbia, but right across Canada. Brendan goes on to say that despite recent government attempts to address BC's ongoing housing crisis, a new economic report from the British Columbia Real Estate Association indicates that the current elevated pace of construction will still be insufficient to improve affordability in the province. Now, we're going to talk a little bit more about that later, but what are their predictions by other organizations on where they think things might go? The Canadian Real Estate Association predicts that national sales across Canada are going to climb 6.6% in 2025, with the national average price to climb about 4.4% to $713,375 in 2025. They figure out of that, there will be approximately a 1.3% increase in the prices in British Columbia. Now, that's a number as a whole from the National Association, but they might not study the local markets here in British Columbia quite to the same extent that our friend Brendan at BCREA might, and here's what he had to add to that conversation. Following 2 pretty challenging years for sales, it looks like the markets across BC are starting to build momentum. In addition to lower mortgage rates, new policy changes allowing longer amortization for first-time buyers and increased mortgage insurance caps will provide a boost to market activity. Although new listing activity has been much stronger than last year, the accumulation of inventory in 2024 had much more to do with a prolonged slump in home sales. With active listings returning to more healthy levels across BC, we expect the market will be able to absorb the coming rise in sales activity without a sharp increase in prices. Therefore, the average price in BC is projected to rise by a modest 3.3% in 2025, following flat prices in 2024. So that's all pretty interesting. It seems that we're likely going to have much cheaper money to borrow in 2025, and we've got not only some major banks predicting that, but also the local British Columbia Real Estate Association, who also is predicting that we're going to see a modest increase of about 3.3% in prices. Now, before we get too excited about increases in prices and what might happen in 2025, we need to talk a little bit about how 2025 is going to be different than 2024. And there's a ton of ways that we could absolutely take this, but there's 3 main topics that I think deserve to be explored a little bit further, at least brought to your attention. The first one is we have a new president coming into power in early 2025, and his name is Donald Trump. And he likes to throw words around. He likes to say words like tariffs. Donald Trump is going to have a massive impact on the US economy, whether that's for the better or for the worse, and that's yet to be seen. But what happens with the US economy is also going to have an impact on the US interest rates, and Canada tends to have to go somewhat in lockstep with interest rates and what's happening in the US. So that's number 1 thing to watch as of right now. Number 2 is the focus on construction, not only across Canada, but more specifically here in British Columbia. And one of the biggest initiatives that we did a video on our YouTube channel that looks just like this, all about the multi-unit small-scale housing initiative that has been put onto municipalities across this province. There has never been a time in history where you've had both the federal government and the provincial government and the municipalities working so hard to add new units for people like you to live in. I'll link that video below, but that also leads us into our third piece of this little puzzle. That's government intervention mixed with a little bit of affordability. Let me explain. The BC NDP, who just recently got back into power, vowed to help middle-income home buyers by providing them with up to 40% of the financing for their property, which is very clearly going to help fuel demand for housing all across British Columbia. The plan commits $1.29 billion to financing and supporting development of up to 25,000 new homes over 5 years. These are 3 pretty major things at play, and of course, no one can predict how it's going to work out, but they're definitely things that if you're thinking of buying in 2025, or at least considering it, you're going to want to pay attention to how each of those is going to affect what happens with the real estate market. But now I want to dive into some pretty common mistakes I think most home buyers are going to make in 2025 that's probably not going to serve their interests quite as well as they would hope. The first is waiting for mortgage rates to come down versus the market getting more expensive. Take your average, let's say $900,000 townhome in the city of Surrey. BCRA predicts that prices will be up roughly about 3.3% 10% in Q4 or at least by the end of 2025, meaning that $900,000 townhome today is going to be worth approximately $930,000 by the end of the year. They think the mortgage rates are going to keep coming down, but these likely aren't the mortgage rates that they need to be focused on. Let me explain. This leads us into point number 2, that thinking fixed rates will go lower as the Bank of Canada lowers their overnight lending rate. Fixed mortgage rates in Canada are primarily influenced by bond yields, particularly the 5-year government bonds, rather than the Bank of Canada's overnight rate. Bond yields depend on market forces like inflation expectations, global economic trends, and investor sentiment, which may not align with the changes to the overnight rate. And as a result, a lower overnight rate does not necessarily lead to lower fixed mortgage rates, the type of mortgage that most home buyers prefer. And currently, as of the day of filming this, variable rate mortgages are considerably higher than fixed mortgage rates because the discounts of where the market is likely headed are already baked into those fixed mortgage rate prices. So while you may see the variable rate mortgages take significant declines over time, the fixed mortgage rates are going to be a lot more sticky moving forward. The third mistake that most home buyers are likely going to make is thinking all the government attention on new construction is going to fix the housing market overnight and add a ton of supply to the market, bringing prices down. This unfortunately is not the case. Despite recent government attempts to address BC's ongoing housing crisis, a new economic report from the BC Real Estate Association indicates that even the current elevated pace of construction will be insufficient to improve affordability in the province. According to the latest BCREA market intelligence report, moving the needle of affordability and meeting the province's housing targets will require much more aggressive reforms. Rather than me explain this a little bit further, let me show you a snippet of the chief economist at BCREA explaining this in better detail.
To build housing, we need a few inputs. We need people to do the on-site work, we need equipment like cranes, and we need gains in efficiency from technology and better processes, something economists call multi-factor productivity. That will allow us to build more units faster and at a lower cost. Right now, we estimate that long-run capacity for housing starts is somewhere around 45,000 starts per year. That's high by historical standards, but probably still too low to make a difference to affordability over the long term. In fact, if we don't expand new supply, it's really hard to see affordability improving. Even if we have a decade of markets in balance, with no accelerations in price, just slow and steady growth, affordability will stay at current levels or even deteriorate further, which means finding adequate housing will be very difficult, especially for young people in BC.
This leads us into the cost of waiting to buy a home. And this isn't going to be pretty. We know that people have gained massive equity over the last few years, especially over the last 10 years in British Columbia real estate, just based on the demand for that real estate. And we can't accurately say whether the future is going to be anything in resemblance to the past, but these numbers are important because these numbers reflect people who waited to get into the housing market and continuously were content with the idea that the market was going to crash. From January 2014 to January 2024, all prices of combined real estate, according to the Home Price Index, over that course of 10 years were up $544,400. This is an increase of $54,440 per year, averaging an increase of $4,536 per month. That's right. Over the last 10 years, the average price of real estate has increased at a rate of almost $4,500 per month. But there's more to that story. Back in January 2014, the discount mortgage rate was 5.24%. If you had have signed a 5-year mortgage and renewed in 2019 at the rate at the time of 4.29% and carried that mortgage for the next 5 years into January of 2024, this is what would have happened. Now, at the time of January 2014, the average benchmark price of a home in the Fraser Valley was about $443,800. But why am I telling you about mortgage rates? That's not what I'm doing at all. What I'm talking about right now is the importance of time in the market. Let's assume that you signed a 25-year mortgage at the time, and at this point, you would be 10 years done with that. But there's more to those numbers that I want you to understand. In the course of those 10 years, while paying your mortgage, you would have paid total interest of approximately $169,015, and that's assuming that there was no change in the property's value. Over the course of that 10 years, the total principal paid, or the equity added into your mortgage would have been approximately $106,861. So you would have paid $169,000 in interest, but about $106,000 would have been added to your equity just by strictly paying your mortgage over the last 10 years. That $106,000 really helps to offset any of that money that you would have put towards interest while you're carrying your mortgage. And it's important to note that over the life of a mortgage, more of each payment goes towards the equity of your home rather than the interest as the principal balance decreases. This means that although it wasn't a complete wash, it only cost roughly $69,000 over a 10-year period, or $6,900 per year to live in a home, which obviously doesn't include maintenance or upkeep. But $6,900 per year is a pretty good deal. So not only did it only cost $6,900 over the course of that 10 years, but we do have to account for the gains in equity based on the changes in property value. The key takeaway from this is the person who decided to act and to get into the market in 2014 didn't just grow their wealth through the increase of the property's value, but they also helped offset their mortgage, and they've only got, if they bought 10 years ago and did a 25-year mortgage, well, they've only got 15 years left on that mortgage until they no longer have any payments. They would be mortgage-free in just 15 short years. So now that you know the state of the market, what to watch out for in 2025, and all of the things that go into having to make a massive decision like whether you should actually invest in the real estate market and buy your next home or your first home, well, there's really three ways to get started. The first way is you can reach out to me and my team. In fact, you can book a time in the link below, which is located in the description, to speak with us and let us know about your plans, your goals, and we'll help give you advice to set you off in the right path to make sure that you can get done what you need to do in the best way possible. Number two, if you're not ready to reach out just quite yet, you want to do some more investigations. And part of those investigations is you want to understand what kind of current incentives are going to be available to people like you buying a home in 2025. These could be things like the increased property transfer tax exemption thresholds, the federal home buyers plan, the ability to now do 30-year mortgages, and the list goes on. And this is where you would want to download our PDF about 21 grants and incentives available to home buyers and owners, which is also available for download in the description below. But maybe you're watching this late at night, or you are just so excited to get started. There's a third way to get the ball rolling so you can get started as quick as you humanly want. And that is this video coming up next, the exact presentation that we give to home buyers to get them set up for success when they want to buy their next home or their first home. And as I said, that's coming up next. We'll see you over on the next video. Cheers.